I'm Matt Bichard with REIT.com, and I'm in New York City for REIT Week 2012, NAREIT's Investor Forum. I'm joined by John Brady, Managing Director and co-head of the U.S. Real Estate Group with RBC Capital Markets. So John, a year ago when we last spoke to you, you said that you thought there was potential for consolidation in the healthcare sector. And we've seen some of that come to fruition, but is there more on the horizon?
I would say that there will be. It was a Canadian company, Maestro, was sold to healthcare REIT in the U.S. You see in the existing healthcare REIT asset portfolios, generally speaking, the growth is muted because they're net lease, and so they need to acquire assets in order to grow their business. You've also seen the sort of top-tier healthcare REITs trading at more attractive multiples than others, which allows accretive acquisitions to occur. And I guess lastly, there's continued to be, whether it's corporations or private real estate owners looking to operate more efficiently by selling off their assets, and I think you'll still see that in the healthcare space.
And the other two sectors that you highlighted were the mall sector and industrial sector. What should we expect from those two going forward?
I think more of the same. There's been the industrial sector's challenged in terms of its the business. There's not a lot of growth. People are struggling to maintain occupancy, so I think that's one of their challenges. But as a result, many of the assets are trading at relatively high cap rates. So you've seen people like Blackstone and others taking a view that long term it's a good investment. So I think you'll still see that. And then in the mall space, we saw Simon buy the big European entity. They bought in their Mills portfolio, and that space is really having a lot of differentiation between the top tier and the lower tier. So you've seen some of the Rouse spinoff and other sales. Westfield sold their B Mall portfolio to Starwood. So I think you'll still continue to see that type of activity.
And all in all, what do you think will be the dominant theme in the capital markets for the next 6 months?
Well, it's still very much global event driven. I don't think that's going to change. When there's a feeling of optimism about Europe, things are looking better, and when it's not, it's the other. More specific to REITs, I think you'll see less equity. The deleveraging has really been accomplished. It's going to be more driven by acquisitions. I think you'll see more corporate bonds. There's been decent corporate bond demand, probably less preferred issuance, be my view.
John, thank you so much for joining us.
Thank you.
For more on this and other news and analysis, be sure to visit REIT.com.